Hello and welcome back. Thanks for tuning in this week. Are you ready to see this real estate pyramid scheme or Ponzi scheme collapse in real time? You've come to the right place. The March data from CREA is not looking too good, but we're going to get into that in just a second right after this week's news. Now, you can't look at any news without seeing a bunch of political crap since our election's coming up, but let's look at some of the political posts from a couple of political figures here. This is our housing minister, Nate Erskine-Smith, or whatever his name is, or Erskine-Smith, I don't know how you say his name. It's time to build more housing. We will drive down costs by reducing taxes on new builds, cutting red tape and speeding up approvals, and investing in innovative home building methods. And there he is, standing with his hard hat in front of some modular homes, I believe it is. Now, somebody made a good point. I was watching someone's podcast, and it says nothing about home ownership in any of the liberals' propaganda when it comes to housing. So just pay attention to that. But anyway, this is what he had to say. Photo op here looks like from, CHCH News. And it looks like some modular suite that you'd put in your backyard or something. This is what they're focused on. Obviously, if you watch any of their stuff that they've released, they're looking at building, mass timber, modular homes, backyard suites, garden suites, and all the rest of it. And from the leader of the opposition, Pierre Poilievre, our conservative plan to axe sales taxes and cut building taxes will save you $100,000 on the average home. Vote conservative to bring homes you can afford for a change. And I didn't look into the plan, actually. I looked last week or whenever this was posted, and I couldn't actually see the plan right away. But anyway, he's promising to save $100,000 on taxes on a new home and axe the sales tax on new homes, incentivize municipalities to cut building taxes. Now, this one's pretty interesting. I did hear about this before, but you actually haven't heard anything about it since last year or whenever the news kind of was first released on it. But this was, the post was from John Fraser, but it was a forward or a quote of another post here. This is what I posted about the other day, folks. The Liberals are coming after your principal residence equity, and they won't be satisfied to wait until you sell either. They will whack you with it every year. Now, I don't know how true this is, but I have heard about it. But listen to what this girl has to say. And she's from the Canadian Taxpayers Federation, and they actually do a great job of checking into all sorts of issues when it comes to taxes, and they find all sorts of things. So they're a very good organization. I like following them. But let's see what she has to say here.
Hey, remember how this current federal Liberal government spent about $450,000 researching and promoting big new home taxes? Yeah. Also, a home equity tax was in there too. Yeah, this is a problem, folks. Remember also how this current federal Liberal government met with pushers, promoters of a home equity tax? Yeah, they did that at least twice. They denied doing this. They said, no, nothing to see here, folks. We're just studying the idea of a home equity tax for fun. We're not actually really considering it. Okay, but we found documents through Freedom of Information that showed that staffers within the federal Liberal government, the current one, met with pushers, promoters of a home equity tax at least twice. Also, the question is, if the federal government isn't planning on taxing you on the sale of your home, the one you own and live in, your primary residence, your nest egg, if they're not planning on taxing you on the sale of that thing, why do you need to report the sale of your home to the CRA? Is the tax man just curious? Are they writing a book? Why do they want to know? So Mark Carney has got to answer this question, like right now. Are you going to create a home equity tax?
That's a really good question. What do you guys think? Do you think that they are researching into a home equity tax? And if so, what do you think about it? I think it's absurd. It's just another tax grab. And again, I have noticed this on the questions for your tax return where they want more information about your primary residence and if you own it and all the rest of this. So they are definitely snooping around there. But I think that would be a big mistake on the government's part to actually start taxing your equity of your house, which is crazy. From Daniel Foch, pretty solid chance we're overbuilding rental right now, in my opinion. Multifamily vacancy rates are past their long-term bottom. I don't think we'll see 2022 vacancy rates again for a long time. And they're building tons of rentals right now. You don't really hear about it, but it's all through the CMHC grants and the loans, 50-year mortgages and all the rest of that. But yeah, they're pushing a lot of rental supply to the market. And you're going to see, we're not going to see those low vacancy rates that we saw. It'll be interesting to see what happens a few years down the road with that. Another one here from Daniel Foch. Toronto area home sellers face a barrage of lowball bids. And I'm not going to get into the article. You can go and read this. It's from the Global Mail there. But I'm seeing it. Like, you see lowballs come in all the time. So many offers get submitted on my listings, or we submit on other ones, and they never work out. The sellers, again, they don't want to accept. I think I talked about this last week. And the buyers don't want to pay too much. So they call them lowballs, but is it a lowball when the houses are inflated? Maybe they're realistic offers and the sellers are calling them lowballs. So it's all, I guess, a matter of perspective. Very interesting chart here from Ben Rabideau. Bank of Canada data suggests borrowers with university degree or higher are currently at greater risk of missing payments than those with some college education. What do we make of this? So there it is, the orange probability of missing debt payment. I don't know how they get the probability, but again, it's the Bank of Canada that's made this chart here. The university degree or higher at a higher probability than the some college or no college. Maybe it's just some college, maybe they haven't completed. But regardless, and I think maybe it's because, like, a lot of the people I work with, you need a university degree now to buy a house. So they've probably taken on more debt and knowing that they have those higher paying jobs and whatnot, but now they're going to be at a greater risk of missing payments. And a big contrast into the kind of news we saw at the beginning of the year when we were seeing, 6% year-over-year increases or 6% increase in 2025 in homes and sales increasing. Now we're seeing the reality. Home prices in Canada expect to dip in 2025 forecasts. So we're seeing these forecasts, these realistic forecasts that we should have seen. Again, I'm not going to get into this article, but it was from Daily Hive there, and I don't know who they're quoting. But we're seeing reports now, and this isn't the first one I've seen of price declines in real estate. And the last chart here from X, the last post from X, I'm going to read here, again from Ben Rabideau. Great stats and information from him. You should give him a follow. Interesting data from Stats Canada. Growth in mortgage debt in the under 35 crowd is negative. They can't afford to buy. But growth is surging in the 55 plus and 65 plus cohort, who are likely co-signing to help the under 35s get into the market. Not only are they co-signing, they're taking HELOCs out on their houses to give the down payments to the kids and the grandkids and whoever else they're giving it to. But here's the chart. And look at that gray line for the old people, 55 to 64 years old, surging. And look at the one going down there, that purplish dark blue one going down. They can't afford to buy. He's right. And the rest of them are going up. But the over 55 is going up faster than anyone else's. So this is an interesting dynamic here. At what point will this change? Hopefully soon, so the young people can get into the market. But that's the latest data anyway. All right, now let's get into these national statistics from CREA, just released this morning. I've already taken the data and made my own charts with them, a little easier to use. And pretty interesting numbers here, but let's see what they have to say. National statistics. Canadian housing demand and prices slide further in March. Canadian home sales fell on a month-over-month basis once again in March 2025, as rising tariff turmoil and uncertainty is keeping homebuyers on the sidelines. Sales activity recorded over Canadian MLS systems sank 4.8% month over month in March 2025, along with declines in each of the 3 previous months. National home sales are now down 20% from the recent high recorded last November. All right, let's see how this data looks. So here is the average price here. The average price right now is $678,000 in March. That is up 1.6% month over month from February, which again, this is the springtime now, and that's not a big increase compared to what we've seen in the last 5 years or so. But 1.6% month over month from February to March, or $10,000. It's down year over year, 3.7%. That's a pretty decent number to be down year over year from last March, $26,000, and it's down 16.8% from the peak, or $137,000. And again, this is the spring market, right? Prices are supposed to be up. This next chart keeps amazing me. Look at it playing out there, this bearish pennant. So of course I have both pennants there, the bullish and the bearish. And the bearish or the pennant is a continuation pattern. So you can see here it's continuing down, and it's going to keep continuing down after. But I still can't believe that this real estate data is playing out like a stock market signal. But it's been treated like the stock market, so it is believable. But Honestly didn't think this was going to play out like this, and I keep saying this every time we come back every month, like it's going to break, or it's going to go outside of this, probably to the upside because of the spring, but it hasn't. This spring has been abysmal, and it hasn't broke to the upside. So if it doesn't break by like May, it's going to the downside, and you're going to see some nice declines. It probably will work like that, but I can't believe it because we are in the spring market. Crazy stuff. Now looking at the year-over-year price changes by month, and I haven't showed this chart in a while, but look, we're seeing those year-over-year price changes now 2 months in a row. And look at back there from 2022, 2023, we had big declines after that big peak. And we're going to see a lot more of these, I think. We'll see if it keeps going, but it doesn't look like it's going to get any better anytime soon, especially with all the uncertainty and the tariffs, yes, but there's more uncertainty than just the tariffs, the general economy and recession. People are now predicting recessions, like the general public is now expecting, like 2/3 of them or something, or 75%, I think I saw, not even 2/3, are like expecting there's going to be a recession in 2025. Here we have total March sales. I think it was 35,000 and something. The average is just under 41,000 for March, so well below that monthly March average there compared with the other years. Here's all data back to 2007. That dotted line is the average over that whole time, and of course, well below. And this is the spring too. Like, this is bad. Months of inventory. This is the big one. The months of inventory is now at 5.1 months, which is huge. And I'm going to show you on the next chart, but this is just the Marches here. And you can see 2019, you have to go back to get months of inventory higher than we're at right now. But let's look at all months. This is just March. Look at all months here. So look at it spike up. Now, again, I've predicted this, or I've forecasted this from other videos. Like, it was just a matter of time till this happens. And we're seeing it now. It's now over 5.1 months. That's going to start affecting prices. We're already seeing it with the softening in the market. But this is the highest level since May 2019, almost 6 years. We're seeing the 6-year high now in inventory, which is insane. Of course, we're not going to include the pandemic there. That was skewed those 2 months. But like, it has spiked and it's happening. So this real estate, again, this Ponzi scheme, this pyramid scheme is coming apart in real time right now. And you get to watch it here on this channel. And I don't expect it to turn around anytime soon. Now looking at the sales to new listings ratio, another abysmal or apocalyptic statistic here. We're seeing, I marked out the buyer's markets, balanced market and seller's market. Now, CREA uses a 45% and below for buyer's market. I use a 40 and a 60. You could use a 45, but I just took mine, the general consensus from the internet. I don't know why CREA uses 45, but I'm using their data or their guidelines here. So 45% below. We're at 45.9% sales to new listings ratio. Let me move my head here out of the way. In March. That's the lowest out of all the data they provided. Now, we've been pretty low in another month this year, but look, it is the lowest. We are almost in a buyer's market nationally. Now, take in mind, this is at the exact same time when Quebec just made a new high in March. Calgary just made a new high in March. So we're seeing these places make new highs with their average prices, but we're headed towards a buyer's market very quickly. So I don't know if we'll get there, but it looks like we are, and that's huge on a national scale to be in a buyer's market. It hasn't happened in a very long time. And of course, I've marked out there buyer's market, seller's market, balanced market. All right, lastly, I have a pie chart here from the Bank of Canada overnight rate data for the past 20 years. This is not from the CREA National Statistics. This was done a couple of days ago. But I just wanted to show you the amount of time that the Bank of Canada trying to keep that inflation under control, right? Their inflation targets between 1% and 3%. But in order to do that, they have a couple of tools. Well, they have some money printing, and of course, they have their overnight rate. So this is where that overnight rate has been. So when it's below 2.25%, it's stimulating the economy, it's stimulative. And when it is above 3.25%, it is restrictive. So between 2.25 and 3.25, it's a neutral rate. Only 10% of the time in the last 20 years, they've actually had a neutral rate. 68% of the time, they are stimulating the economy to keep things going with ultra low interest rates. And these were really low a lot of the time. And then we have the restrictive rates, only 22% of the time. But look, 10% they actually managed to keep a neutral rate, which is terrible. So they're playing yo-yo with these interest rates, trying to keep inflation under control, and they failed miserably at that. But again, I thought this was very interesting just to see how much they do stimulate the economy with low interest rates. Now, tomorrow we have the Bank of Canada rate decision, and whether it's justified or not, I feel that they're going to lean towards cutting the rates because they're worried about the economy, they're worried about the tariffs, they're worried about the housing data. They look at the housing data, it's a huge part of our economy. And sooner than later, we're going to be back in that blue section, stimulating the economy and, making sure that people don't go bankrupt. Even though they've just driven up prices, it doesn't matter, and they've taken all this debt. You'll be rewarded if the Bank of Canada and the Government of Canada has their say. Their hands are tied a little bit, but we'll see what they choose. Are they going to choose tomorrow inflation or low interest rates? We'll see, but it'll be interesting. Okay, so that's it for this week. Let me know, as always, what you think in the comments. What do you think the Bank of Canada is going to do? And what do you think of these March national numbers from Korea? Anyway, until next week, I'll see you then.